So the government shutdown is pretty much disrupting the real estate market, right? The housing market. I can tell you that firsthand. So welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Randy Patrick here, putting the realism back in real estate. Hope you're doing well. So stuff's happening here, and I've got real live examples. So yes, we all know that as of October the 1st, right? The government shut down for whatever reasons, and it's been sort of beating up the housing market. So if we're looking at federal loans being stalled, flood insurance claim in limbo, builders brace for delays, etc. So we're seeing a lot more, I guess you could say, um, news articles and commentary about the situation here with the shutdown, how it's affecting properties, etc. So yeah, definitely problematic because I'm experiencing that personally right now. So we'll get into that in just a second here. This video is brought to you by our friends at foreclosure.com. So if you're looking to find what type of distressed properties are in your neighborhood, your county, your city, your zip code, go to gethousingdata.com. That's gethousingdata.com. Foreclosure filings are up, short sales are up, tax deeds are up, lots of distress happening. So if you want to get something where you're not paying top dollar, you look at a data site like this. Okay, gethousingdata.com. Check it out. You won't be disappointed. All right, so I went through some of the stuff here, and I sort of summarized this here. So obviously, the government is shutting down, so certain elements of the real estate industry are going to be affected. So this is broken down to a couple sections here from my analysis. So what isn't yet hit hard? Okay, so conventional mortgages with via private lenders or securitized by Fannie Mae or Freddie Mac. Those are continuing to be written because those entities are funded via lender fees rather than day-to-day congressional appropriation, right? So part of the Fannie Mae and Freddie Mac are GSEs, government-sponsored entities. So part of that process was they need to sort of stand on their own, make their own money, and be sort of self-sufficient. So they're actually doing that. Core housing sales, listings, and offers are still happening. Homes are going on the market, and buyers and sellers are still active. But nothing is coming to a screeching halt, was an article quotation here. Homeowners refinancing or doing conventional non-government-backed transactions may not feel immediate disruption unless what they're doing is tied to a government-funded program. So if you're doing sort of like I would call average real estate transactions where you don't have anything that's government-backed, things should be going okay so far for you. But there's going to be some nuances here, right? So what is being affected, and they say or may be soon, but it is now. So delays in government-backed loans. So loans that are backed by FHA, the Federal Housing Administration, Department of Veterans Affairs, VA, and USDA, so agricultural loans, are more vulnerable because these programs depend on agencies that may furlough staff or reduce operations during a shutdown. Also looks like tasks like income verification, tax transcript retrieval via the IRS may be slower if the IRS curtails operations. So I can tell you that this is going on right now. All right. So we're doing a lot of, as I said, distressed properties. I'm working a lot of short sales, and many of them are, VA back loans or FHA back loans. So when we're working with, say, the lender, the direct lender, or the servicing company, and they're backed by FHA or VA, they do get involved. So the communication, between we'll call it lender, servicer, and the VA or FHA is taking longer, and it's sort of coming through at a crawl, and we're not really getting through. And a lot of these deals we want to close because we're there, but we just can't get the final push over here. So this is where you can find that it's kind of disrupting the opportunity. So again, we're seeing complete, stuff happening right now, delays in stuff that we're dealing with respect to, VA, FHA, etc. Now, flood insurance issues. So clearly, we have the National Flood Insurance Program. It's a FEMA, administration thing. It's required in many, pretty much all mortgage transactions that are in flood zones. So during the shutdown, the NFIP may be unable to issue new policies or renewals, which can block closings in flood-prone areas. So, for example, a lapse in the program will impact future home sales that rely upon the federal program. All right. So yeah, because no lender is going to issue a, we'll call it, issue a, loan package or the approval when, it needs flood insurance, and we're still technically in a hurricane season. Typically, at least in Florida where we are, The hurricane season goes until like November 15th. Some people say it's November 30th, but technically speaking, there could still be storms. So nobody is going to issue that flood insurance, which means you can't close because your lender, the new lender, the buyer's lender, won't actually go through the transaction until they can get, some sort of, you know, uh, essentially confidence that there's going to be flood insurance, taking care of the issue. So that's going to hold up sales. So it's again, this is all going to be a domino effect. So please keep that in mind. And buyer, seller, market confidence, uncertainty. So right now we're into day 22 of this. If it keeps going, you're going to start seeing more impact. So obviously, government has to participate in some of their programs, etc. Delays. If it goes on too long, guess what? Buyers or sellers could back out, or as they say, ask for renegotiations if the deal is riskier, right? Typically in contracts on real estate, there are provisions that are in there that basically says like things like act of, God or stuff that's out of control, that there would be the buyer and seller agree to extend contracts, this and that. But it depends on how long this goes on for, right? So it comes to a point where if you're the domino effect, say you're trying to sell your house to buy a new house, etc. So it can impact people, buyers and both buyers and sellers in multiple ways here that could cause disruption for transactions. Also, local program and affordable housing impacts. So agencies connected with the federal government that subsidize housing, vouchers, public housing programs could face disruptions, which in turn affects multifamily development because they use the vouchers, affordable housing inventory, and possibly the broader real estate value market. Again, you've got housing assistance, down payment assistance. There's other programs that are out there that could be on a state or county-wide level that are helping people, first-time home buyers, whatever. So there are things that could, assist and be really important to the closing of the transaction for a purchaser. Obviously, then that affects the seller as well too. And if some of those programs aren't either being funded or can't be funded or can't come to be available, or the paperwork can't be done for the buyers, then again transactions are going to stay and sit there until something changes. Or you could be a buyer, a seller could find a better offer and cancel the contract, and the buyer could just say we're canceling because we don't have what we thought we would have based on what's been approved, or what we were told we were going to be able to get our hands on for down payment assistance or other things for the closing of the transaction. So again, this is going to be a domino effect of what's happening in the housing market. So again, just to summarize here, government-backed loans, you should have a contingency plan. They're just saying, well, what is your contingency plan here? Backing your loan slows operations. If you're an FHA buyer, that may be the only program you're approved for. So, can you buy or can you not buy, right? Flood zone, same thing here. Is insurance policy at a risk for delay of issuance or renewal? So will that cause additional risk? Clearly, communication is important about timing. Sellers should consider whether prospective buyers may back away or ask for concessions due to the added uncertainty. Keep the contingencies in mind. Everyone should be aware of the market sentiment. Longer delays can reduce demand, which can affect negotiating leverage and value in sales timing. And again, they're talking, keep in mind that the shutdown is brief, the impact is manageable. To a point, I look at it going, well, say today was the last day of the government shutdown and tomorrow everyone's back to work. Well, now there's going to be a backlog of stuff that has to be done, right? So escalation issues, this and that. So that's where we're going to find significant changes in the housing market. We already know that there's been certain government offices that have had their staff reduced since the beginning of the year, which has already affected the processing of some of the things that I do. And, a longer, so we were already on kind of like delays with them, and a skeleton crew or nothing happening at these government offices or entities, do not help move real estate in any way possible. So it's pretty much a mess. So obviously, you're going to have articles that, talk about certain areas. So the U.S. government shutdown threatens home sales in flood-prone areas, the report says. So this is interesting. It says the report from Home Abroad, a real estate investment technology platform, estimated that about 3,619 home closings were at risk nationwide daily. Okay, translating to a heck of a lot, almost 1.6 billion. If they did the transactions time the median home price, right? That's just some spitball and some ballpark numbers here. But the point, though, is that you can see, when we're talking 3,600 transactions a day, right? Now, don't forget, typically you don't have real estate transactions closing on the weekend. So we're talking Monday to Friday, right? So we're in what, the third almost 4 weeks of well, we're 22 days in October. So let's take out, three, at least, 6 days there. So we're got, 15, 16 working days that have affected, that will be affecting or have affected closings and transactions that are not happening right now with the flood insurance program stuff. So again, you can just see how the domino effects happens, and what happens to buyers and sellers as this goes longer. Who remains to be seen, but it doesn't help the real estate market, that's for sure. And the market is still kind of distressed as far as I'm concerned. So obviously, if you're in coastal flood-prone markets like Florida, Louisiana, Gulf Atlantic regions, it's more often required. If you're in markets with high reliance on federal employment, for example, if there's a lot of government offices or entities, and a lot of the workers are, basically not getting paid on furlough, housing demand might weaken if layoffs and furloughs happen. And also, if cutbacks continue, then what they don't talk about here is that, well, maybe people can't pay their mortgage, and that affects those individual people on a much greater scale, right? Affordable housing, multifamily sectors that rely upon federal programs or subsidies will be affected, and transactions involving smaller rural or special programs in rural communities. You're going to have government agency bottlenecks as well too. So this is really not good for anyone when it comes down to the housing market. So, and folks, once again, if you appreciate the information I provide on this channel, if you could subscribe, I thank you very much. All right, moving on here. A big risk picture, a short shutdown, a few days. Well, we're past a few days now. We're into a couple, 2+ weeks, is likely to cause mostly delays rather than outright cancellation of deals. A longer shutdown, weeks to a month or more, raises the risks of material disruption, stalled closings, delayed loan approvals, canceled or postponed sales, especially in at-risk areas. So ultimately, that doesn't help the marketplace. And the commentary here is the housing market already has headwinds with higher mortgage rates and affordability issues. So when the shutdown acts, as another deterrent or acts as an additional layer of risk, it's not the sole issue, but doesn't help the situation and where people are at. All right. So, we need the government to figure this stuff out. It's hurting the economy. It's hurting buyers and sellers. There's a lot that goes on to the housing market, right? Just because I'm in Florida, I saw this, the other day. Government shutdown hitting the housing market, and Florida shows what's at stake. So basically, they're talking about Florida being a robust market, and again, the market being a standstill and the flood insurance and things like that. So this is, as they said, certain states are going to feel this pinch more than others. Florida already is in what I would call a distressed state. It's also a state where real estate's a dichotomy. And, we can see with the flood insurance program here and all these slowdowns on government-backed mortgages. Well, to go along with, high unaffordability and higher interest rates, we also have an increase in foreclosure filings. All right. So this came out the other day, well, maybe a few weeks ago. Top 10 places where the highest foreclosure rates are. And this is from, I think, August or something like that in the summertime. But point being, you're adding insult to injury here. Look at the top 10, and 6 of the top 10 are in Florida. Lakeland area, Cape Coral, Fort Myers area, Ocala area, Jacksonville area, Palm Bay, Melbourne, Titusville area, and then I was wrong. And then Jacksonville, North Carolina. Okay, there's 2 Jacksonvilles there, right? So we got 1, 2, 3, 4, 5. So 50% of your top 10 places, 5 out of 10, are in Florida. All right. So doesn't bode well for the housing market, and that's just the way it goes. So, for me personally, for example, HUD, Housing Urban Development. So there are, like FHA and Fannie and Freddie, government-backed loans. The HUD also gets involved in some of the loans as well too, and backing them. So we have deals that we are ready to go on, and we need, when you do a short sale, you need to get what's called a letter of approval from the lender, or in this case HUD. And because they are not there, or they're on a very skeleton crew that's working, we can't get any information. So we've escalated. There's no one there to escalate. Our negotiator has called them, and he's on hold for 45 minutes, and it times out and hangs up the phone. So you can't talk to anybody That's the situation. So, we have deals that we need to close. We're ready to close. We've done all the work, but we just can't close them. So that's affecting, me, other agents, buyers, sellers, whatever that is out there, title companies. One of the things with respect to real estate is that when you actually take a look at, how much real estate means to the GDP, the gross domestic product, and how many things happen when there's a real estate transaction, right? So real estate transactions, what does it mean? Well, typically there's mortgage person, whether that's a mortgage broker or a banker or a mortgage lender, they're originating a loan, okay, and there's, they're getting paid on that loan. There may be a processor who's processing the mortgage, getting paperwork and all that stuff done. There you go. Closing's done. Title company is basically closing the property, so there's title insurance and things like that. They've got staff, etc., going on here. Real estate agents. If there's real estate agents in the transactions, you got buyer's agent, seller's agent. That's happening as well too, right? So, what also affects real estate transactions? You have appraisers that appraise a property for loans. You have home inspectors that come out and do the home inspections for loans, for to make sure everything is okay with the property, right? When you buy a home, okay, so you've got, is someone moving out? Well, there you go. You got moving expenses, etc. You're going to someplace else. That means, are you buying something else or renting, relocation? How does that play out? The new buyers, right? Well, they're moving in. You got to have a moving vehicle and the support for that. You're going to buy things for your new house, right? Or your apartment or your condo, whatever you're buying. You're going to spend money, right? You're going to have housewarming going on. You're going to have, work being done, maybe painting, maybe some repairs. You're going to Home Depot, you're going to Lowe's. So when you start actually looking at, what happens with a real estate transaction, how deep it goes and how many industries or sub-industries it touches, it's quite a bit. You're moving. I mean, you move people, especially when you're younger. What do? You pizza and beer afterwards. You thank the people for helping you, right? So, it's things like that that just sort of keep going on. Housewarming gifts, right? There's just so many things that happen that are related to real estate. So that's the concern. So it's not just the actual buying and selling. It's the other, we'll call it, related industries and related services that are getting hurt as well too. So it's a very large domino effect with respect to what's happening when you have a housing slowdown and a government shutdown. Okay, there you go. Just so you guys are aware, this is what we do in our business here. Foreclosure auctions, short sale, short payoff, sub-2, purchase sub-2, all sorts of stuff, bankruptcy, code violations, surplus, note buying, the flood, hurricane, homes, the whole bit. So we sort of hit the whole scope of what's on this list here and what we can do or have done, will do, can do, are doing right now. So if you want more information, please look me up. Information's in the video here, on the body of the video information, and you can connect with me. So that's what goes on in a real estate business on a daily basis. So let's hope that the government shutdown, for many, many reasons, not just including housing, gets solved as soon as possible, because there are people who are waiting to change their lives, their lifestyles, earning income, selling, whatever they need to do. It's not, the shutdown's not helping, and it's creating some problems for the greater economy. All right. So anyway, guys, appreciate the views, the likes and comments. If you would like, please share the video with your family and friends, and I'll be looking forward to speaking with you probably next week. Take care.